If you've ever had that feeling that the investing world is a game that's, maybe rigged against you, well, you're not entirely wrong. So today, we're going to break down the playbook that helps you not just play, but actually win the modern money game. And this really is the central puzzle, right? I mean, you can start investing with just a few taps on your phone. It's never been easier. But here's the catch. That same ease of access has created an environment that is just full of hidden dangers, all designed to trip you up. So how do you navigate all that?
Okay, let's dive right in, because the first battle you have to win, and honestly, it's the toughest one, it isn't against the market. It's against the person in the mirror. It's against your own brain.
Let's start with what is probably the biggest glitch in our financial software, something called loss aversion. You know this feeling, right? Finding 20 bucks on the street? It's pretty cool. But losing 20 bucks? Ugh, that stings. It feels way worse. That imbalance is a leftover survival instinct that, in the world of modern finance, can cause some absolutely terrible decisions.
And this right here, this little scale, it shows you exactly what's going on in your head. Basically, the science backs it up. The psychological pain of losing is literally twice as powerful as the pleasure you get from an equivalent win. This emotional seesaw is at the root of so many classic investing mistakes.
And this is where that feeling starts to cost you real money. Big time. That intense fear of loss is what triggers panic selling when the market takes a dip. You end up turning what might have been a temporary downturn into a permanent loss. It's also why we cling to losing investments, just hoping and praying for a rebound. And for a lot of people, it creates this paralyzing fear that stops them from ever even starting.
But it's not just about fear, We've got this whole cocktail of mental biases. There's overconfidence, that feeling that you've got the golden touch and just can't lose. And then there's confirmation bias, which is basically our brain's desire to only hear things that we already agree with. As you can see, for each of these biases, the key is to have a system, a strategy in place before your emotions have a chance to take over.
Okay, so we've got these built-in glitches in our brains, but here's the scary part. It's not just an internal battle anymore. There are outside forces, the very platforms you're using, that are designed to weaponize those biases against you.
Welcome to the digital casino. So many modern trading apps are designed with all the flashy lights and sounds of a Vegas slot machine. You get digital confetti when you make a trade, you see leaderboards, you get constant notifications. The goal isn't to help you build wealth slowly. The goal is to get you to press the button again and again and again, pushing you from rational long-term thinking to short-term emotional reaction.
And on top of all that, this whole digital space is just drowning in noise. A huge source of that noise? Finfluencers. They're all over social media, offering a constant fire hose of hot takes and stock tips, but it almost always comes with very little substance and zero accountability. So, what's the actual harm in listening to them? Well, it's pretty shocking. Just look at this number for a second.
Yup, 12.2 times. That is how much more likely you are to get scammed on social media if you follow the advice of a finfluencer. That is not a small risk. That is a massive flashing red light.
And this quote right here, it says it all. There's a massive conflict of interest. Look, the platform's business model is built on you trading as much as possible. That's how they make money. But your path to building real wealth, it's usually the exact opposite. It's about being patient and trading less. See the problem? Their success is fundamentally at odds with yours.
All right, so we've talked about the brain game and the digital casino, but let's get down to brass tacks. What does this actually cost you? Let's look at the cold, hard numbers.
And it all starts with something that looks so harmless, so tiny, you'd probably never even notice it. Like a really small difference in the fees a fund might charge.
But that tiny little number, over the course of your life, it can add up to something absolutely huge. We're talking a loss of 146 grand.
And this chart just lays it out, clear as day. You see those two bars? That gap between them? That's $146,000 of your money that didn't end up in your retirement account. It just evaporated into fees year after year after year.
And you might be thinking, but my trading app has zero commissions. It's free. Well, not so fast. There is no such thing as a free lunch. The cost just moved. It's not an explicit fee anymore. It's what we call a behavioral tax. It's the money you lose when the platform nudges you into making a bad, emotional decision at exactly the wrong time.
So you see, it all adds up. Whether it's the slow bleed of high fees, the gut punch of panic selling, or the constant churn of overtrading,
Each one of these mistakes is like a tiny hole in the bottom of a bucket. It might not seem like much at first, but over time, you end up losing a whole lot of wealth.
Okay, so that all sounds pretty bleak, right? We've got our own brains working against us, and these digital platforms pushing all our worst buttons. So how in the world do you fight back? Well, the good news is, there's a playbook, a winning strategy.
Think of these 5 rules as your game plan. They're simple, but they are incredibly powerful. First, build a solid foundation. Get rid of high-interest debt, build up that emergency fund. Then, you focus relentlessly on minimizing costs with things like low-cost index funds. You use your biggest asset, which is time, by being strategic when you're young. And number 4 is huge. You use a rules-based system like dollar-cost averaging. That just means you invest the same amount of money on a regular schedule. It takes all the guesswork and emotion out of it. And finally, you have to learn to filter out the noise.
And really, if you remember just one thing from all of this, let it be this quote. Look, winning in investing isn't about being some kind of stock-picking genius or predicting the next big thing. It's not a game of skill, it's a game of temperament. It's about being consistent, being patient, and sticking to a smart, simple plan, no matter what the crazy headlines are saying.
So I want to leave you with one final question to think about. Building wealth is a marathon, not a sprint. So you have to ask yourself, is your current approach built for the long haul? Or are you getting caught up in the short-term thrill of the race, in danger of burning out before you even reach the finish line?